Are your minor children helping you out in your business? Make sure you pay them the right way. There's nothing better than teaching your child discipline and the value of money by having them help you out in your business. And I see this all the time. I try to do this with my own family. And what we want to do is set up this mindset that we earn our living. We work and we get paid. Money doesn't grow on trees. I'm sure your parents said that to you as you were kids. And it doesn't just fall out of the sky. We can't just go to the store and buy toys. Fortunately, we can, but we work hard for it. And we want to instill those values in our kids. And when we do that, we pay them through our business. But sometimes we're paying them through the wrong business and exposing ourselves to additional tax. One of my favorite strategies here is the income shifting strategy. What we do is we take income that we would generally earn and pay tax on and shift it to our kids. What does that do for us? How does that help us? We are taxed at a high marginal tax rate. Let's say we don't have to push it to the 50% rate with federal, state, and FICA tax. Let's say we're in the 24% tax bracket on the federal level. We're paying about 9% on the state level, and we have that 15.3 FICA tax. So we're right in the middle. If you combine all those numbers, we're close to that 50% mark. So every additional dollar that we earn, we're paying at least, we have the 24 plus 9, which is 33 plus 15.3 is about 48%. And that's kind of like the average business owner. This is what we're kind of looking at, for a really small business. What we can do instead of paying that 48%, we can shift it to our kids that are paying a significantly lower amount of tax. And sometimes we're looking at a 0% tax. And how does that work? So the standard deduction for 2023 is $13,000 approximately. So we can actually take $13,000 from our paycheck and shift it down to our kids and pay them. And again, they have to do work. We'll get into the details in a little bit, and we can shift it to them and they can pick up that $13,000 on their tax return and essentially pay zero in tax on the federal side because they're below the standard deduction. But don't they have to pay FICA tax? Don't you still have to pay that Social Security and Medicare tax for them when you put them on payroll? And the answer is not if you do it the right way. So generally, if you hire them within your business, let's say you're an owner of an S Corp and you put them on your payroll, then yes, you would have to pay Social Security and Medicare tax for them. So you would pay the employee part and you would pay the employer's part. But you can actually go around that. There's a tax loophole. The IRS says if you hire a minor child in a business that you own outright without any partners except for your spouse, then any wage that you pay to your kid is not subject to FICA tax. So we can stack these benefits together. So you're gonna pay them less than $13,000 or more, which again, for FICA tax purposes is irrelevant. You're gonna pay them around what you pay them. They won't be subject to FICA tax. And then when you actually record it on their income tax return, they won't be subject to income tax either. That's a double benefit. And you will essentially be shifting, let's use $13,000 for simplicity, 13 grand to the kid. And at 48%, $6,240 that you're keeping in your pocket by doing this. And that's per child. Not everybody's a Brady Bunch, but people have 2 kids, 3 kids that fall into that category. They can easily implement this strategy. Now, the question is, how does this work? How do you actually implement it? I said you can't do this through your S corporation. So if you're doing this through an S corporation, even if you own it outright, that's not going to work because you're already on payroll and you're subject to FICA tax withholding. What you have to do is either run this through a partnership that either you own with your wife or a single member LLC that is owned outright and report on your income tax return. You file no previous wage reports. What you'll do, let's say you have that S corporation, what you'll do is create a family management company that is going to take care of paying your kids. So you have your S corporation that is running your operations of the business and paying you as the owner because you have reasonable comp that you have to worry about when you're an S corp owner. So that's paying you and any other employees that you may have. Then you have this family management company over here that you had set up that is paying your kids for working essentially indirectly in your family business. So the family management company is going to take care of paying your kids for anything that they can do. Shredding paper, social media, cleaning your office, client relations. They can answer emails and phone calls. You can hire them to do all these things. Again, depending on what age they are, as long as they're under 18, then they are not subject to FICA tax. And they're not subject to FUTA tax either, which is the federal unemployment insurance piece, which is generally an annual filing, especially if it's a family management company. And they're not subject to that until they're 21. So 21 is the cutoff for FUTA, 18 is the cutoff for FICA. You put those two together and you're saving a ton of money every single year. And then let's continue on with this train of thought. So you have the family management company that's paying the kids. You're issuing them a W-2 at the end of the year. They're filing their tax return. Let's say for this example, you're paying them 13 grand. They pay zero tax on the federal level. Now you have to take a look to see which state you're in. For a minor that's claimed as a dependent on a parent in New York, your income tax rate is going to be fairly low, but the standard deduction is $3,000. You're still subjecting yourself to tax for $10,000 of that income, but it's nowhere near the rate that you're paying as a parent. So instead of paying $6,200 in additional tax just on the federal side, you pay zero on the federal side, and then you're kind of shifting just $10,000 over to the kid. You're gonna pay a few $100 for that, and you call it a day. Great trade. Let's take this one step further. Your kids have this W-2 that's coming in from your family management company. What can they do with this money? They can spend it on things that they want to buy anyway. They want to buy that new toy? You can use your money. They want to buy a new pair of sneakers? Great, you can use your own money. That new bike? Great, you can use your own money. They want to take karate lessons or guitar lessons? Great, you can use your own money. You have that money in the bank. What else can they do with that money? They can take that money and they can put it into a Roth IRA account. What you can essentially start doing is building up your kids' wealth and retirement while they're still minors. And if they do this consistently, let's say they start working for you when they're 10 years old, they work until 18, they've just banked $48,000 over the course of 8 years working for you, and that's in their Roth IRA account, assuming zero growth. Average, let's say 8% growth. They're on their way of reaching close to 6 figures in that account just by putting away $6,000 each year into their Roth IRA account. But again, you gotta put things in place and you gotta do it right in order to execute it successfully and get that tax benefit. Hope you enjoyed that video. Like, follow, share, and comment if there's anything that's on your mind. Happy to address it.